Welcome back. We're watching oil prices this morning. Back up right below $50 a barrel. A bit of a rebound going on here after getting hit Friday on that disappointing jobs report. Crude oil getting support amid disruptions in Canada and Nigeria. We want to bring in Tom Kloza. He is chief oil analyst at OPIS. Good to see you, Tom.
Nice to be here.
Yeah, well, we see oil right below $50 a barrel. Is that sustainable, you think?
It's sustainable. It's kind of like the Yankees this year. You're going to hit about 500. You're going to go above 500. You're going to go below 500. But to get really above that number is going to be difficult. I mean, every dollar is going to be very, very difficult because we're up there now because we've got about 4 million barrels a day of disruptions. Nigeria, Libya, the usual Sudan, northern Iraq, Kurdistan. The odds are that we'll probably won't exceed 4 million in disruptions, and we're going to get a little bit more Saudi oil and a little bit more Iranian oil.
But Anthony, I mean, we've been in this range for so long, 20 to 40, and to see it break out close to 50 has stabilized the stock market, certainly.
Yeah, and I think it's also helped the budgets of places like Saudi Arabia and Russia. So I guess my forward question is, do you think we ever see $75 a barrel in this business cycle?
It depends on how you define the business cycle. I don't think we're going to see $75 a barrel before 2020.
Okay.
We'll definitely see it in the next decade. And I think probably we'll see somewhere between $75 and $100 in the next decade, although maybe not for an entire month or a quarterly cycle. But we're drilling less offshore outside North America than we have in 30, 40, 50 years. And that will come back to haunt the market probably about 2019 on. So if you buy a car, recognize that you might be able to get gas for $2 right now, but you're going to pay probably $3 plus for much of the life of the car.
Is Iran's production and then their exports, are they ramping up quicker than you would expect?
Absolutely. They're doing much, much better than we expected. And I think there's probably a little bit of schadenfreude there where we'd like to see Iran suffer, and we don't think they've got the capability with the engineers, but they're able to toss more oil on the market. Now, it'll be interesting at the next OPEC meeting because they'll have really ramped up to maybe something closer to capacity, and then maybe they'll be more amenable to a freeze. But for right now, there's really nothing for OPEC to talk about when they have these gatherings.
Tom, is there a price point for the marginal shale producer to actually turn on more wells and ramp up production? Because we've seen time and time again over the last 2 to 3 earnings cycles that managements have said $50 is the number that they're using.
Right.
Is it 50? Is it 45? Is it?
Well, I would say that no two holes are created equally. So there is oil that can make, and boy, that can have some other political
Don't
context
extrapolate.
there. But there are some markets where you can make it work at $35 to $50, like the Permian Basin, and then offshore it's very difficult sometimes to make it at $60 to $80 a barrel. But generally for shale in the United States, you get into the mid-50s for the next 12 months, you'll see some more rigs and a little bit of an increase in production.
What about gas prices? The average gasoline price for a gallon of regular gas, $2.36. Summer travel season getting underway. Are these going to be two different, like a bifurcated market where crude goes and where gas goes, and where do you think this is headed?
I think we're going to see gas trade between $2.25 and $2.50 nationally. California is going to be about $1 cheaper than last year, but about $2.75. And then when you get to the end of the summer and you have enough summer gas, the formula changes. It's like baking a cake, and there's a lot of cheap hydrocarbons that come in September. So the last 100 days of the year and in the election cycle, we're going to see prices drop again, where people will think it's like the gods of Mount Olympus trying to get low gas prices. If only they were that capable. You know, that's what I would say.
How low, Tom?
I think we'll see a lot of sub-$2 numbers again in the fall.
Sweet.
I do, but I do think
that the consumer's saving that money. That's the interesting thing. They're not spending
it. It is, but what are they doing with the money? I mean, we know that they're going to save about $140 billion versus, let's say, 2014 or 2013. But where is it going?
Well, healthcare costs have risen. We've seen
that's
that.
So
a lot of money is starting to go towards healthcare costs, as well as smaller consumer discretionary discretionary things. When they're at the pump, they'll buy like a Monster energy beverage or something along those lines.
They're going to dinner, they're going to hotels. That's where the money has been spent.
Right.
It hasn't been spent on things like apparel, that's for sure.
Yeah, well, maybe some savings, too. Maybe some
savings.
people are
How about
paying
that
off debt.
sweet brush cutter at Lowe's? They're spending it on that.
They're spending it there. You're talking to a guy who goes to a hardware store like once every 5 years. So yeah, that's what the phone is for.
You just
Thank you
ruined
so
your
much.
image of your image.
You
for
in the
me.
hardware store. Leave
I
us
had
with
your
that.
size just like that, by the way. You don't ruin your image for me.
Tom Kloza. Coming